Hello and welcome to today's analysis of for expiry. Now, as I had said that I'll be making on so many days expiry trading videos in which I'll look at the option basically expiring for that specific day. Yesterday I made for the Bank Nifty and today I'm making for the Nifty. Now, yesterday what I made for the Bank Nifty worked out very well. This is, I had said, if we open flattish and we break 48,050, then we can fall to 47,800. And if by chance we break that, then 47,650 is the next support. That's exactly what happened. This is as we fell to 47,800, hovered, then fell to 47 towards bit below 47,650. And I have even shared on Twitter what I watched to catch that trade, as I shared the trade proof of how I caught that trade via put buy. Now, I had said that if we fall to 47,800 zone, then towards the end of the day there's a risk of a sudden spike, and that's what we also got. This as we fell towards for basically 47, we fell to 4700 and had a sudden drop to 47,650 and then a sudden spike back up, which took us to basically way above 47,800. So that assumption was also right. And also, I had also said P sellers will be safer, and we can see that spike on the upside was stronger than the spike on the downside. So put sellers did have a safer time, and as expected, the put sellers below 47,800, as I had said, due to the support being at 47,800 and 47,940, put sellers below that should be okay, and that was correct too. And C sellers of above 48,400 basically also made money as expected. Now, coming to the Nifty for tomorrow. On the news front, when I'm recording this video at night, there is not much, as the global markets are basically waiting for more and more comments about the inflation outlook. But I think it's pretty obvious, and anybody with a bit of logic can see that nothing is going to happen. They cannot do a rate increase at any cost, and they cannot do a rate cut at any cost. So the situation is going to say status quo, and I believe the market even knows that, and that is why it's just holding steady. Then on the other global news front, for UK, the CPI inflation data is coming very hot, and that has confirmed that in June there will be no rate cut coming there, and due to that the British pound is even doing a bit better. Then for the American market, the 10-year treasury yields have risen by further. This is the less dovish comments which have been made so far by the guys of Fed who were speaking, has helped the US dollar and the yields, and that is also what has kept the market flat. So basically that's the whole global scenario in terms of news as of now. Now coming to the index for tomorrow. Now we have been hovering within a range, as we have been in this range, and then before we were in this range. So we have had, this week has been basically a very range bound trading session for the Nifty. The Bank Nifty has been range bound, but it's had a bit of a wider range than the Nifty, as Nifty has been very tight. So not giving many chances, and in fact I have focused more trading of mine on Bank Nifty than Nifty, as Nifty's, the number of points is moving for the past few days is very, very low. So now how I expect tomorrow to play out. Now Nifty has a very strong resistance at 22,700 and at 22,750. So I expect this range to be a major hurdle. In fact, let's take a look at the bigger, we go to a much longer time frame, so we can see, let's say, the whole of May and everything. Now 22,700 and 22,750 is going to be a very strong resistance. So any up move towards it will have to deal with a lot, and we can see one of the reasons is that at this point we have a high volume bar that is causing a lot of bearishness to continue, and that is being further analyzed by the volume buildup, which is completely equal, and also the trend catcher indicator is completely flat. It is above zero, but it is completely flat and it's not going anywhere. So now, how will I be trading in terms of an option buyer perspective, in terms of option seller perspective? Now, in terms of option buyer, even if you're going to trade next week's strikes and not tomorrow's expiring strikes for Nifty, any trade between 22,600 and 22,700 is going to be very small scalps. That's going to give you very little profit, and it's going to carry a lot of risk due to the expiry trading session. So unless it breaks out between this out of this zone, I will not be trading the Nifty. I'll keep my focus on Bank Nifty for day trading more, as the range is too tight and you will not get enough points to, number one, make money, and your risk level is going to be too high because of the expiry. So the only time I'll put a trade on the option buying front is if we break 22,700 and try to go above. If we do that, then we can basically trade it to 22,750, and a break, by chance we'll break this point, then we'll be able to go to 22,900 easily. This is due to it being an expiry. A break of 22,750 will trigger short covering, and short covering will give a, let's say, spike of, let's say, 5-10 minutes maximum, and we go towards 22,860 and 22,900, which is the next main hurdle. This move will give good money on option buying. However, this range bound is only going to kill option buyers, and in fact anyone thinking of trading tomorrow's Nifty strikes, which are expiring tomorrow, will nearly 100% lose money, because the decay is going to be more than any movement which can give you. So it will be better to trade the options expiring next week for the Nifty. On the downside, it's the same as the upside. No option buy until it breaks 22,600 in a clean manner. If it breaks that, then there's a small trade to 22,540, as it's 60 points on a 22,000 index. It's not much, but it will give you an okay profit. But if we break 22,540, that is when we'll get the juicy trade towards 22,400. However, until then, this range bound trading is simply not worth it for option buyers, as Bank Nifty will give a wider range, which will give you more chances to make money in the range bound trading side. Now on the option selling front, since that is a completely different game, as long as drop back to 15-minute chart, as long as the volume build up continues to stay bearish as it is now, and the trend catcher indicators continues to stay flat, option sellers above 22,750 will be safe. 22,700 call sellers above 22,700 should only enter towards the end of the day. This is as you don't want to be caught in sudden spikes. This is if there's a sudden spike to attempt it, that will stop you out, and then it will go back to where it was, and you will have lost money for nothing, as technically the index didn't do anything, but you lost money. On the downside, I wouldn't think also selling early 22,600 and below puts would be wise, as it's just too close, and any small spike will send that put price for a few seconds up, stop you out, and then it'll come back down, and you'll have caught and smashed for no reason, and you anyways will have to put the stop, because you do not want to get into margin troubles also. So on the downside, if you're selling puts, I would say focus on more 21,550 puts and below. On the upside, if you're selling calls, 22,750, that's the safer range for the whole thing, because this range will cause sudden spikes which will hit option sellers and everything else. So tomorrow also, I believe, is a better day to trade Bank Nifty, even though Nifty's expiry is there. On the option selling front, there'll be more money to be made than option buying. This is the range is too tight for option buying, so it's more of a losing game until we get out of 22,600 to 22,700. That's it for the video. Thank you, and do hit the like button and subscribe to the channel and hit the notification bell.